Hi, I'm Roger Montgomery from Montgomery Investment Management, and welcome to another edition of our weekly video insights. Today I want to talk to you about the Aussie market and our views on the Aussie market. The rally is only in its early days, and of course we've maximised that rally and in fact outperformed. But as the market continues to rise and as the share prices of the companies we like the most rise even further, we're becoming increasingly nervous. That's not to say that we're predicting a correction, but certainly the market's strength belies some weaker underlying fundamentals. If we look to the United States, for example, manufacturing in the US, which has been one of the major drivers of what little economic growth has existed there, is now in recession. What we've described as a great deleveraging occurring globally has in fact not seen any reduction in aggregate debt levels in the United States. If anything, they're increasing. And so amid contracting manufacturing and rising debt and lower personal incomes in real terms, we're concerned that the US is now slowing down from its already anemic growth rates. Couple that with what we know to be a situation in China where the official GDP and GDO numbers are understating economic growth. And when you look, for example, at electricity consumption, which is down 10% this month, and exports from Japan down 10%, remember Japan is China's largest trading partner, then we think the risk for Australian stocks is increasing. China's slowing down, the United States is slowing down, and everybody is aware that QE3 and the concerted effort throughout Europe to buy back bonds means that the world is worried about lower economic growth. In that environment, it's difficult to imagine that stocks are going to continue their rally, but they are. Stocks are going up, and in the United States, the total return index for the S&P and the Dow Jones are now at all-time highs. We think the risks are increasing and you need to be on alert. Many of the companies that we own are now trading at or above our estimates of their current intrinsic values, and while we expect them to grow further, we're conscious of the fact that any decline in the United States and further deterioration in the economy could mean those prices pull back. Make sure you follow us on Twitter and Facebook, and keep an eye out for regular updates here on the blog. See you next time.